Hello, this is Mike Swanson, and you're listening to the Wall Street Window podcast. In a very few moments, I'm going to have a special guest I'm going to speak with. I'm going to be talking with Chris Vermeulen, who runs the website, thetechnicaltraders.com. Now, if you have been a frequent visitor of my website, then you probably have noticed over the years that I frequently will reprint some of Chris's articles on my website because he's got a keen insight into charting, technical analysis, and trading. And I last spoke with him on this podcast a couple months ago. I think it was around September. So I wanted to get an update from him on what he sees not only happening now in the markets, but where he thinks are going to be the places that are going to be the best profit opportunities in 2020 from a risk to reward standpoint. And we're in a moment now in the markets where the volatility the past couple of days has shrunk to absolutely nothing. The stock market averages are barely moving up or down on a percentage basis or a point basis at all. And we're kind of just floating up. It's as if everyone has already gone on vacation a week early, but they'll be back and action will resume. And what I see on my radar, which really appears to be lining up, is gold and silver and the mining stocks, because gold has been sitting here consolidating with very low volatility right below key resistance, which is around the 1385 to 1390 area. A break of that will make people who are trying to bet against gold cover, buy to get out of their short positions, and it'll get people that have been watching and waiting on the sidelines for confirmation that another rally is starting to jump in and buy too. Because in the end, most people only chase action. They don't buy ahead of action. And that's going to provide some key moves when it happens in mining stocks. And I'm going to go through all of them. I'm just going to mention one. That's Aftermath Silver, which I made my top stock pick of the month. It's trading in the Vancouver Exchange, symbol AAG. In the United States, it trades as FLMZF. But I'm looking at the Canadian chart today, and it's sitting there at 34 cents. The 20-day Bollinger Bands are squeezing. It could continue to do that for another day or another week. And if it does, it should set up for a nice new move up from there. And lots of mining stocks are in that position. But when you get smaller stocks, like this one, trading at 34 cents, it's nothing for them to go up 10% or 20% when they go up. So these are the type of opportunities I think are lining up in the metals market and that I'm watching. But what else is out there? What is Chris Vermeulen watching? That's what I asked him. And so let's go to that interview. One quick commercial break and then on to Chris.
Go ahead, caller.
Yeah, I'm interested in the truth about the JFK assassination.
Right. Well, what do you want to know?
Judy Baker's wild claim, Oswald girlfriend, she knew Ruby and Barry, cancer weapons. Really?
I imagine I could claim I have 4 wheels. It doesn't make me a wagon, but okay.
Oswald was on the kill team and trying to prevent the murder of John Kennedy. Come on now. Has a real expert on the JFK assassination looked into her claims?
Go to Amazon.com. Enter Judith Baker in her own words. You'll get results for a digital copy of a book where Walt Brown utilizes her own words and the known evidence in the case to get at, well, a different perspective, let's say. You can get Judith Barry Baker in her own words from the author himself, signed if you request it, by contacting Dr. Brown at KIASJFK@AOL.com. It's a fun book, and it actually dissects the many, many fantastic claims. Judith Barry Baker in her own words.
Thank you for all the great information.
Hey, how you doing today, Chris?
Hey, good, Mike. How are you?
Great. Well, thanks for joining me. We last spoke a couple months ago, and I'd like to get your update on what's going on. The stock market has been going up since we last spoke. I think it was around September, and gold's been going sideways. And you have an interesting article I put up on the website. Just the headline's interesting. Current equities rally similar to 1999, and it certainly has some feeling like that because we're just floating up and there's not much volatility this December.
Yeah, the markets, I know it's, if you look at some of those charts that people put up where it shows the market price and they label it, like euphoric stage and denial stage and decline and all these things. I mean, I feel like we're in that kind of euphoric kind of area where prices just every pullback is getting bought up and prices is just rocketing higher. I mean, everything is screaming there's a pullback coming. We're seeing, commodities have been going down for a long time. They're all basing and some of them are starting new bull markets. And, we usually see commodities firm up near the end of a stock market bull cycle. So I think there's a lot of things coming together. And when you look at 1999 compared to the price action today, I mean, even the 2007, I mean, we've got the price action, the volatility, the market sentiment, they're all screaming the same type of thing. Even it's actually similar to that of 2015. I mean, in 2015, we almost started a bear market. If the market closed one of those months down near the lows, it would have been technically a new bear market, but Trump got in, markets ripped to the upside and really haven't looked back. So it got saved, but we've seen this kind of euphoric stage several times going back, and usually they end with a market top unless something can buck the trend. But I think eventually we're going to see this market stall out and roll over and correct. But the big question is when.
Well, even last year, or at the end of 2017, the stock market was kind of like this too, and then it blasted off January 2018 and made a top then. So that was sort of similar to the type of action where you're talking about how this could lead to a top where, there's no volatility in December, then January, you just kind of shoot straight up.
Yeah. I think January is going to be a pretty pivotal month for the market. I have a feeling stock market could become fairly unstable. I think we're going to start to see gold and silver and miners start to break out. I mean, they're all primed and ready. The gold miners are already in the very early stages. They've already kind of turned a corner. They're already making higher highs on the daily chart, higher lows. They've broken some previous resistance peaks. So gold miners typically lead the way for the stock market in general and for gold. So to me, I think we're, just weeks away from potentially a good rally in the metals sector, which, everyone's been bullish on it forever, but people just aren't committing their money. We're not seeing dump loads of money going in to break gold, silver, and miners out of this, multi-month consolidation. But once it breaks, I mean, it's going to be exciting. I mean, we've been waiting for a bull market in miners and gold for a long time, and this current multi-month correction, the longer it trades sideways, the bigger the potential breakout's going to be. So the longer it trades here, it's good. It's this bullish price action, and the breakout will be even bigger. So I'm not in a huge rush, but it'll be exciting when it does break.
Oh yeah, for sure. That's what I think personally, that's what I'm most excited about for 2020, and I think there's going to be huge opportunity there. But I know you look at a lot more than just gold or silver for that matter. You look at lots of other commodities. So when it comes to outside the metals world, what else has your attention?
Yeah, well, this year has been the year for natural gas. We've been knocking it out of the park with natural gas trades. I'm back in August and September. There was a huge rally, which we played that rally, and there was another almost identical setup again in October. We played that huge explosive rally and got out of that one right at the top, and then we ended up getting inverse and shorted it and profited from the decline to where we are now here in December. And now the market is setting up. It's not finished yet, but it's setting up a very similar type of bottoming formation that we saw in August and October. And, we're on the verge of, I think, another really nice move in natural gas. Right now it's trading at $2.27. And I think it could very easily go back up to the 260. And really, the longer term charts are showing we could see one of these massive winter spikes where we get up into the 350, maybe even higher. It's going to be interesting to see how January, February play out for natural gas, but it feels as though today is a pivotal point, or over the next week and a half for natural gas. It needs to hold up here, start to move up a little bit, and we'll be looking to get long, because once it breaks the high from a couple days ago, gets through that 20-day moving average, I mean, it should be locked and loaded and ready for a fairly significant run.
Well, as we're in the final weeks of the year here, and 2020 is coming. You were telling me before we started the conversation, or I started recording it, that you're lining up to launch some new trading services, some of them involving exchange traded funds. Sounded really interesting. I know more and more people are interested in using ETFs. So could you give an idea of what you're planning?
Yeah, sure. So in January, in a week and a half or so, we'll be launching the Technical Investor, and more or less, it's for long-term investors, and we're looking at mega trends. Every year, there's usually 2 to 3. We average about 3 new entries per year. Once you're in a bull market, that trade lasts for years, but every year there's significant entry points. And really that is just catered to long-term investors. They know where their money's going, whether they should be long equities, cash, or with some type of inverse ETF during a bear market. And really it's just to give investors the broad view of what's going on, and so they know that their money's on the right side. Very, very simple, laid back service. But there's huge demand for traders wanting to know what to do with their, I'm in Canada, so we have our registered saving account, and you've got all the other 401k accounts for long-term investing. And it's super easy to just buy an SPY or a 2 times or a 3 times leverage ETF to be long the markets. And when things start to go to risk off, you could move into a bond fund or move to cash or an inverse ETF. So we kind of give you the exact, where the trends are, what stage we're at, what ETFs you should be invested in. And we send out alerts whenever there's a shift, and it'll just be a monthly newsletter. The other newsletter we're doing is, it's our automated index trading system. It uses the SP 500 and bonds, and it's constantly rotating between long equities or long bonds. And it's going to be a really exciting service, because that's really where a good chunk of my passion is trading the indexes and bonds, because you can trade large amounts of money and it's relatively slow, but these trades last around 45 days long. So we're looking for 5 to 15 to 20% moves. And it's a really comfortable, slow moving strategy. And it's not like trading natural gas that can move, 5, 10% a day, and with a leveraged ETF, 20 or 30%. This is what we're calling as a technical wealth advisor, is for large money to be put to work. It's a long only strategy, long stocks or long bonds. And that's what I'm really excited about for the new year's. We'll have a service for investors, active investors or managers, and the wealth building newsletter, which we trade commodities and all that with, as the wealth building newsletter.
No, that's going to be interesting to find out about more once it launches. I'm going to keep my eyes on it. But, right now is just a few days before Christmas, and I feel like the stock market's just kind of floating around. So I'm just kind of watching what the action, and, keeping my eye on the gold stuff that you were talking about before.
Yeah, I mean, we're in that holiday kind of bulge, right? It's this is the time of the year we see stocks typically go up. Volume should fade off here, starting next week. It'll fade right off. And I mean, yeah, this is a great time of year. It shouldn't be too much volatility. Everybody's on holidays, and everybody's getting ready to make 2020 a killer year. I think 2020 is going to be huge. We got election. We've got a potential bull market in commodities. We got a potential bear market in stocks. We've got potential rates starting to climb, things are going to start shifting. So there's going to be huge opportunities. All these things just scream, money, money to be made, trading and investing. So new major trends are going to be put to work. Our investing newsletter, the average trade is around 4.5 years with re-entries every year. So, I mean, next year we could be starting 2 or 3 of these new mega trends. And on average, we're doing 162% return on each of these trades. So, I mean, it's really exciting stuff for a long-term investor because 2020 is the year that major trends should start to take place, new trends.
Yeah, that's the sweet spot, getting in something right when it's starting. So there's going to be opportunities to do that. Well, and I'm looking forward to next year myself for many of the reasons you talked about. Well, thanks for taking the time to talk to me and everyone else, and recommend they check out your website, thetechnicaltraders.com. And I'm also going to link in the post I'm going to use for this podcast to some of your recent articles so they can check out your current thoughts there on what's happening.
Great. Well, it was always a pleasure, Mike, and we'll talk in the new year.
Thank you.
All right. Take care.